Hey everybody, Jim Malone here. It is Dallas Trading Floor for Wednesday. Golly, Wednesday, the 20th of August. And man, the the market is moving higher today. Wow, it's kind of on fire. So pretty cool, actually. We're definitely seeing, we're definitely seeing a lot of action. Kind of interesting. I mean, no pullback, no pullback here. So just wanted to get into some of the slides here, just to kind of show the market direction. Well, we were definitely in a confirmed uptrend. Still, it is looking good. The Nasdaq 11,246. So there seems to be another rotation back into the techs. Wow, it is amazing. And as you probably know from some of my previous broadcasts, I am trading Tesla and Apple right now through the splits, and I kind of have my own way of doing that because splits typically follow a pattern 90% of the time, and I'm kind of following that pattern. And I'm going to go over that once again a little bit right after this, just after looking at kind of where we are. The S&P is up today too, so that's terrific. We're also up on the Dow Jones. So, wow, volume is down a little bit, but everything else seems to be sort of falling into place. So it's kind of interesting that we have such a strong movement today. The S&P 500 ETF, the Spider. By the way, this is the largest ETF in the world. It's many people have their entire retirement accounts here. And not something I would recommend, but a lot of people do. So that's a good thing that the Spider is going up. This ETF is worth, well in excess of $220 billion, more than most countries. Well, small countries anyways. And just a tremendous, tremendous thing. It is up $1.05 today, or 0.31, which is pretty amazing. The volume's down quite a bit, though, so it seems to be, people seem to be holding on to it. But what's so interesting about this is that basically we are right at where we were before this COVID thing happened. I mean, 340 on the Spider is essentially where it topped out. It topped out. So if we get a new higher high in the next few days on increased volume, now we don't have the increased volume, we are probably going to go higher if that can be. If you can imagine that. So we are absolutely not out of a bull market. The bull market is yet continuing. So very, very interesting. Remember, before we got into this downtrend, the Spider was trading at about 340. So it looks like it may exceed it, and that would be absolutely phenomenal. Today, the big story, of course, is the QQQ, which is basically tracks the NASDAQ 100, and these are the 100 largest stocks in the NASDAQ index. And so this is tremendous. It's up 3.53 or 1.28%. I do think that part of the reason, a lot of people will throw eggs at me for this, but I do think that we are seeing a surge into both Apple and into Tesla prior to their split. So there tends to be a lot of excitement out there, and that seems to be kind of the way it's working. So we are really amazingly high here. If we move over 280, this will just be phenomenal, because this will be a new high. Now, one of the things about this, the volume is down a little bit, so it's not as much conviction. But if we start to pick up conviction here, wow, again, it could be another tech thing. So here is, I want to show you the chart on Tesla. Basically, I have a little arrow here. This kind of shows where Tesla is. It's actually a little bit beyond that. We are starting to see its run up, and it's going to run up into the split. Now, the split is going to happen on the 28th, but the date of record, the day that you have to be a Tesla shareholder in order to get the split, is Friday. So we're very close to that. It's Wednesday today. We've got Thursday and Friday. I suspect that we're going to see it run up prior to the split. I just do, and it seems to be going that way. So that's where we are now. Now, after it splits, I believe the best time to sell it is right before the split. But after it splits, it's going to move down a little bit, as you can see here. It's going to move down, and why? Well, because after the split, after the split shares start trading on the 31st, what's going to happen is we are going to see some people rebalance their positions, sell off, and possibly put, sell those shares. So that's going to cause some selling pressure. Now, I don't think that selling pressure is going to last, and I think once that selling is done after the 31st of the split shares, I think we're going to see Tesla move yet higher. And that's basically why I think you should sell and then wait through the split, and then as it moves down, as it's coming back about a week or so after the split, basically September 3rd or 4th in that time frame, then I think we're going to start to see it move up. And I definitely think this is a good time to acquire some of the split shares in a upward motion. Now, remember, of course, if you're going to do this, take a look at the charts. This is how I'm going to trade it. It's not a recommendation for anybody out there because I am not a licensed broker, and this is just really for educational purposes only. But I do think this is typically how it's going to trade, and that's the way many of these trade. So kind of a cool thing. So I'll come back to this if you have questions later in the show. But let's take some questions. Thanks. So let's see. Okay, well, all right. Looking for right. I am too. I am too. I'm here. Thank you very, very much for thanks very much for stopping by, and I appreciate it. Hopefully you're seeing us on YouTube. Well, I guess you're seeing us on YouTube. Great. Thank you so much for that. By the way, for everybody on TikTok, we are broadcasting this live on YouTube. It's youtube.com/Dallas Trading Floor. So, that's a good way to see kind of the charts that I'm putting up there. Unfortunately, with TikTok, I can't show them, but a very big deal for me. It looks as if we are finally now over 20,000 people have signed up as a follower of Dallas Trading Floor. Thank you very, very much. I so appreciate it. This is on TikTok. We also have followers on the other platforms: Facebook, Twitch, Periscope, and YouTube. But thank you everybody out there on TikTok for making this possible. And it's just a tremendous thing. So I'm going to kind of put up the Tesla chart here, just kind of give you an idea of sort of where we're trading right now. It's up $134.64 from the close yesterday. Wow, that is amazing. And one thing I want to show you here that's very, very significant, and I think you should take a look at this. You'll notice that this blue bar, this is a histogram here. This shows the volume. And by the way, this is not linear. This is exponential. So anything over this line here, this is the 50-day moving average. This is just tremendous. The volume change today alone is 44%. So a lot of people are moving into this. Is there still time for this issue? I don't know. I think the time to buy something like this, really, the best time is a little bit late. But I do think that towards the end of the day, and we're very, very close to the close, probably the best time to buy it is right before the close. But again, that's not a suggestion, so it's just for educational purposes only, as they say, and all those things. So, but I do think we may even see it go higher. Now, how high will it go? Who knows? But I do think it's going to reach its peak on the 27th or the 28th. That's what I'm guessing. It's still the confirmation. The composite rating of this is 98, which is just phenomenal, considering how far it's come. I mean, I literally started. I was in this stock basically back into the December time frame when it went above a cup and handle buy point at 361, if you can believe it. Wow! So it's really moved up since then. Now one thing I want to indicate here is that this is kind of an unusual, phenomenal stock. I think as everybody knows it. I want to show you also with Tesla why things are happening like this. Look at the earnings per share percent of the current year. Wow, it's up, and this is just I can't even imagine this because I think this is really hard to get your hands around. But 44,350%. Wow, that it doesn't get much better than that. I don't see how it could. This is just probably a once in a lifetime thing. Maybe not. I don't know, but it is in the industry group rank 1. So even if you aren't in Tesla right now, and you want to get into it, and you don't have enough money for one share, I totally understand. Wait until it splits. I do believe that we're going to get a second chance on this stock, and I'm going to kind of show you if you don't have the entry fee, and I know it's a lot of money to get into Tesla, but if you are not in Tesla and you want to be in Tesla, then I just kind of want to show you the sort of the opportunity that's going to happen after the 31st. So basically, we're running up towards this where it says 4 here. This is going to be on the 31st. It's going to split, and then it's going to come down a little bit. For about a week, we're going to have an opportunity to buy it before it starts to ascend once again. And of course, this is the value of the split share. So let's say, for instance, it does. Let's say it is a $2,000 stock, which I don't think that's unusual. Well, let's give it something that's that we can look at. Let's say it goes and it splits at $2,100 a share. We're going to still have, we're gonna still have. Well, let's say it goes to $2,000 a share, and it splits 5 for 1. So if we divide 5 into 2,000, we get 400. So each split share is going to be about 400. I do believe that that's going to back off a little bit and then possibly come up again. But the most important thing is, if you're not in the stock right now and you do want to be in the stock, then kind of wait until the split. Don't buy it on the day it comes out, because it's going to be expensive, because it's going to retreat a little bit from there. And I suspect that it will be about a week or so, or maybe even as long as 2 weeks, but probably about a week or so, because there's a lot of demand for this issue. By about Friday of that week, so about September 3rd or 4th, it's going to start traveling up once again. So that's kind of a second chance to possibly get into Tesla. So there we go. Cool. Thoughts? Should I stay in AMAT? Applied Materials. Well, let's take a look at Applied. Here's the thing. You typically want to not. It's probably too soon. Now let's see. Did it move off? I'm just trying to see if we went in before earnings or not on that. Let's just take a look on that. Okay, yeah, we're down a little bit. Ouch. Not a lot. Okay, what I would do here on Applied Materials, and this is for Wendy in Canada, thank you very, very much, is I would, put your stop losses in, but I suspect it's going to bounce off of this 40-day moving average, off of this 50-day moving average at about, it looks like at about 62.50. So, let's see how it settles at the end of the day. But I just expect it's going to bounce off of that 50, off of that line. So, I would set my stop loss at about 58.50 probably, and then I do believe it's going to bounce off the maybe not 58.50. That's a little bit low. Maybe 59.25, right about there. And I do believe it's going to bounce off of the 50-day moving average. So I think you'll see it's going to come down to that 50-day, and then it will bounce off, because looking at this chart. So that's what I would predict for AMAT, and it's just that. It's just a prediction, but I do think we're going to do that. Can you can you give your take on Tesla volume? Yes, I can actually. Tesla. Let's look at the volume, Tesla volume here, because it's pretty spectacular. Because here's the thing about this chart: this isn't a linear chart. This is an exponential chart. So if we look at the volume down here, and I'm looking down here in the box, you can see this blue bar that's come above the 50-day moving average quite considerably, and there's been huge buying pressure in here. The volume is up 43%. People are crowding into the issue right now in order to get in there before the split. And the split is going to happen, of course, on the 28th, but people have to be of record by the 21st. So that's what's happening. People are crowding into the issue. I will probably be a seller at the 28th, my guess, and then I'll probably buy it back after it comes through the split. So that's how I'm going to trade it anyways, and kind of an interesting thing. But yeah, it's definitely, people are crowding into it. People know that we are going to be in a situation where it's probably going to go into the S&P 500. I mean, that's a big deal, but it also, and I think this is very important, it may eventually become a Dow component because of the fact that there's no car company in the Dow since the bankruptcy of General Motors in 2008, and there hasn't been a car company in there since that time. So, very interesting. But a lot of people want to own it, and so a lot of people want to own it. So there's a lot of, nobody wants to sell it. That's the reason the price is going up. Nobody really wants to sell it that much. Everybody wants to own it. So guess what? The price is going up, and that's why it's going up. So that's why I will be a seller right at, I think, the peak at the sort of the apogee. That's kind of a space term there. And that will be probably on the 27th or the 28th. That will be the point of maximum demand. That's what I'm thinking is going to happen. So we have a question for J&J. Can we take a look at it? Absolutely. Now, J&J, great company. It's more of a safety bet. It is coming into a buy zone, so that's very cool. So let's take a look at J&J. And here's J&J. Basically, we have a very nice cup and handle, and we have the long handle. The buy point on J&J is 151.67. So I'll put that in the comments just so you'll have it. J&J pivot equals 151.67. There we go. So anyways, I'll put that out to everybody there. Basically, J&J looks very ripe. It looks like it's going to move higher. It's a sort of a sideways chart, to be honest with you. And it is a good chart. It's a good company. A relatively safe bet. It is. Fortunately, it's come through earnings. It was down a little bit in earnings, but we are seeing some very nice movement here, and I want to point this out on the volume. If you see the volume spike, there's a volume spike above the 50-day moving average. So that means it's being accumulated, and it also means that we're coming into. It is literally right on the cusp. It's right below the buy point. It's currently trading for 151.48. I believe that it is buyable starting at 151.77. Why would I say that? Well, because the best way to buy something that's in a cup and handle in a base formation like this is to buy it 10 cents above the buy point in the buy zone. Now, as you all remember, the buy zone is the buy point times 1.05. That gives you a 5% margin, 5% zone there. And the best place to buy it in the buy zone is 10 cents above the buy point. So the buy point is 151.67. Add 10 cents, 161.77. That's the ultimate place to buy it. So you might want to put a limit order in on that at that price. And I don't think that you will be disappointed if you buy this. It looks like a very, very good chart. So I appreciate that very, very much. Thank you for asking that question. Great question. And by the way, Johnson & Johnson is just a great company, and it's a very, very safe company. So very, very safe. What is the Tesla RSI? Well, you know what? Interestingly enough, I don't use the RSI. I use something a little bit different than that. I use what they call the relative strength, the RS. And let me explain that just a little bit, how that works. I look at the strength of Tesla versus the S&P 500. So I'm gonna pull up that chart here and show you kind of what I mean by that. On then this, I think, is a better measure of its strength against the S&P 500. If you'll notice this blue line here that I'm kind of outlining, and it says RS rating 99. Well, what that means is Tesla is doing better. If this line is the S&P 500, this blue line here, and what RS rating 99 means is that Tesla is in the absolute top 1%. Remember, there's no 100% because it's 99 to 100. So this is the top performing stock right now, basically in all of the market, and it's outperforming the S&P 500 by 49%, because the S&P is always going to be about 50. So this is just absolutely phenomenal chart. At 99, it doesn't get any better than this, folks. So that's the kind of thing. You have extremely strong accumulation. You have the highest rated. There is a buying frenzy going on right now, and obviously it's a frenzy coming into this split. The same thing is sort of. By the way, I want to point out that the same kind of action is happening. So to somewhat lesser extent in Apple. Remember, Apple. Apple is now the most valuable company in the world. Now, is it right that it's the most valuable? I don't know. I can't tell you that. All I know is that it's being accumulated heavily before the split. And of course, the split is going to be on the same day. So look at this. Wowee, kazowie. Now, Tesla is a 99 relative strength. Apple is a 94, which is no slouch, by the way. No slouch. And it's coming off a cup base, just tremendous. Look at that. Look at that volume. Again, this is an exponential scale here, not a linear scale. So this just shows super duper strength. And that's another one that I'm in as well. That is Apple. So by the way, Apple is the stock that saved Warren Buffett's bacon. Why do I say that? Well, Warren Buffett is a value investor, and there's a lot of people out there that are value investors. And what he did is he said, wow, the airlines are super cheap, and so are the banks, and so are the cruise lines. And guess what? Yeah, they were cheap for a reason, and they went down. That's why. So about a year or so ago, he started accumulating Apple. Now, Berkshire Hathaway is the largest investor in Apple. So that is incredible to think about it, but it's true. It is the largest investor in Apple, and it basically saved the bacon of Berkshire Hathaway. So let's see. I'm going to look to see on TikTok. And thanks for making Apple a great deal for me. Okay, buy Apple after the split. Okay, let me explain that. Let me show you kind of what's going on with Apple. And I just want to kind of show you the charts. And then I don't have an Apple. Essentially, the same chart applies for Apple as it does with Tesla, because it is a stock split. 90% of the stock split follow this pattern, but let's take a look at that pattern. Now you're going to have to be a little bit, you're going to have to suspend your disbelief just a tad, because I made these charts up for Tesla and not for Apple, but essentially it is the same situation. It's the same situation, and I want to show you that right now. So it might be a little confusing that it is a Tesla chart, so just forget about that. This also applies for Apple because of the way it's going to trade. Apple is going to trade up to the 27th, and then after the split, it will move down, and then after about a week, you're going to see it move. The split value is then going to start moving back up again, and that is a good time to buy it. So if you are looking for Apple to buy into Apple, and you don't have it already, and you're not going to hold it through the split, what I would recommend is waiting until about September 3rd or 4th. And that way you're going to go through the split. It's going to split 4 for 1, and then once it goes through the split, it's the split shares are going to move down a little bit as they're being sold off, and people are rebalancing their portfolios. And then as that ends, which it's going to take about a week or so for that to happen, it will then start moving up once more. And then you want to buy it on an uptick, not on a downtick. So that's what I would recommend. And I'm predicting, and again, it's a prediction. It's not it's not set in stone. I don't have a crystal ball. I don't have any insider information. I just want to make that clear. It's basically going to start moving up, I believe, about the September 3rd to 4th time frame, and then you're going to see those split shares move back up. And of course, there will be, instead of being 465 for $470 a share, they're going to be, like $120 a share, $115 a share. But I do believe that they will split at about 120 or so. Because I think it's going to split at about 480, maybe 500, but let's say it's 480. It's going to split about that. That split share, so then it's going to come back, going to retrace a little bit, probably about $10 down to about 100 or 105, and then I think it's going to start moving back up. So it's hard to say exactly, but how to say, very very interesting though. Okay. What do you think about RA Medical? Okay, RA Medical. Well, I don't know what RA Medical is. Let me see if I can get some info on that. I don't know. Is it RA? What is the symbol on that? That would be very helpful. No, that's Brookfield Real Assets. I don't think that you want to do that. Closed-end fund. Okay. No, I don't. I can't tell you on that because I don't know the symbol on that. So very important on that symbol. Do you think Deli? I don't know if it will reach $2,500. If it does, wow, that would be super awesome. That would be super duper awesome if it did. Here's what I'm doing, by the way, to protect my position. And I have quite a bit of Apple, and I went out and I bought some more, and when they announced, I bought some more and all that stuff. I am pushing up my stop losses. Currently, I have them set at $1,900 a share, but I will probably push them higher. I do think it could go as high as $2,500. I really do. It just depends on what happens between now and the 27th. Really, I think it's gonna tell the tale. But what I'm going to continue to do is push my stop loss up, and that way, if it does snap back, I'll be protected on the way down. I did this before when we had the blow off top on on Microsoft back in the February timeframe. I don't know if you remember that, but we went way up. I started buying at 361. That's the pivot. That was the pivot, the original pivot on Tesla. That's why it's so important to buy on pivots, especially first base pivots, like the 361 was. It then went up and it pivoted again at I think it was 865, and then there was a sort of what they call a pocket pivot. It wasn't a true pivot at 1,000. I have a bunch of videos on that one that I put out there because I was buying it and selling it, and then I started buying it, accumulated it once again under that period at the time. Now, there hasn't really been a pivot since then. Now, I was stopped out last week before they announced. I was stopped out of Tesla at I think it was 1384. I was stopped out that night. They announced that they were that they were going to split 5 for 1. I was buying in the after hours. I had to pay as much as $14.08 for it, but it's moved a little bit since then. So, and then I've just been pushing my stop loss up ever since. So that is, I didn't like having to give up that with the stop loss, but if you get stopped out of a stock and it moves back to the up direction, don't be afraid of getting back in it. That's the main thing. No stock goes up straight. It jerks up and down between these base levels. That's what I'm talking about with these pivots. So that's what it does typically. So it's kind of cool that you gave me that question. All right, so let's see. Neo, okay. Well, it's already at 2,000 plus. Yeah, it is. What about Amazon? Wow, my brother called me this morning. He was talking about Amazon. It's like, and I'm not in Amazon. I wish I could be in Amazon because I do think it's just, it's unbelievable too. And it is, let's see if, AMZ, and so let's look at the chart on Amazon. I know it's a tremendous chart. I was looking at it last night, with my study group, and it's, what can you say? Amazon is a great company, and right now they're sort of getting even bigger. So, I don't know. I mean, I don't know how big they can get. For some reason, I am not. Yeah, it's not pulling up. Wow. Let's see if I can give another chart on that on Amazon. Amazon AMZN. Huh, let's see if I can give that right here. So here we go. And Amazon AMZN is the symbol. Of course. There we go. Boy, look at that. Oh, just unbelievable. Unbelievable. The volume's down a little bit, but look at that composite rating, 99. Wow. It doesn't get any better than that, folks. That's the best. It's up a little bit today, up $36.89, or about 1.113. It's the gift that keeps on giving. I think we're going to see it trend down a little bit. It looks like it's in a channel. What I mean by that is it's kind of moving up this. You see, this is the 50-day moving average. It's moving right up that. It's not even coming back down and hitting that, but it's moving up in this channel. There's a channel here. I don't have the channel annotated on this chart, but this is moving in a channel, and so it's going to move. It's going to move up and down, but mainly up. So it's going to move in an upward direction, but it's going to bounce up and down. So great stock. I don't know if I would buy it at this point. I think I would wait until it moved to the bottom of the channel, and then I would probably be a buyer at the bottom of the channel. But right now, I am not in the stock. So, but it's really great. It's looking very nice. There's nothing really awesome to buy off of. There's no real awesome base that I can see. Let's see if I can give a better look at that with Amazon AMZN. There we go. So hopefully I can. There we go. Yeah, it's okay. Finally, it came through. Yeah, we're in a buy zone. We're in a buy zone. Can you believe it? Wow. The buy zone on this, the pivot for Amazon. Let me see if I can give you exactly the pivot. 33.44 is the pivot for Amazon. So AMZN pivot is 33.44. Yeah, so that's really good. And I just put that out to everybody. By the way, everybody looking on TikTok, not a problem. You can see my charts very easily. All you have to do is go to YouTube. It's youtube.com/DallasTradingFloor, and this is number 114. So episode 114. And if you want to sign up for my action trade alerts on TikTok, super duper easy to do. All you have to do is go to my profile, hit the link, and you'll be taken right to the sign up page. It's totally free, of course, and you can quit or anytime you want, but you'll be getting my trade alerts. And I did several trade alerts on Tesla before this big run up. So hopefully I'll have some other good news to share with everybody that gets onto the trade alerts. And by the way, if you're looking on TikTok, on YouTube, or Periscope, or Facebook, or Twitch, and hopefully soon to be LinkedIn, we're trying to get on there right now. It's very easy to sign up for the stock alerts or for the action trade alerts. Just go to DallasTradingFloor, all one word, .com, and put your information in there, and you'll be on the list to get them just as soon as they come out. So that hopefully we can share some more really good news for profit making. And by the way, I also have another thing out that is kind of fun, and that is my portfolio, my small portfolio. I took about $5,000 and I've been trading it, and I'm going to show you exactly how I'm trading it. So let me just give you a kind of a screen view, kind of a preview. But if you're interested in this, you need to go to DallasTradingFloor.com, and then in the lower right-hand corner, there's a little red kind of lettering. Put your name and first name and last name in there, and email address, and you can subscribe to this, and I'll send you out a link so that you can see kind of what's going on with this. So let me get this up and show you kind of how we're doing. So let's see how we're doing with the um, oh, that's the slide set. Now I want to look at the sheets. I gave it to the wrong thing. And what this is this is on Google Sheets, so it automatically updates, and I will show it to you right now, but it's hard to see on the screen. So the best way to see this is to sign up for the link, and I'll send you out that link. But here it is, and this is basically how I am trading my small portfolio right now. And currently, I have some holdings. I'm down a little bit on my. I did move into Dollar General. That is not. I went in at 198.10. The pivot was 198, and of course 10 cents above, and it's down to 197.80. So it's a little bit off. If it gets more than 8%, I will sell it, as you can see. But the other things look pretty good. I've been in Tesla, of course, on this buy for 8 days. We're up 24%. In the last 4 days, we're up 13% on Tesla on the second buy. We're also up on Microsoft, and we're up on Facebook. So pretty cool. Also, down here, I have a watch list that I keep up to date. Man, there's two items. Wow, there's two items that are in the buy zone. Wow. And I may acquire this one, OTEX, and that's been on for basically 4 days. It's absolutely in a buy zone off of a good base. And then, believe it or not, well, Alibaba's not in there. Applied Materials, look at that. Applied Materials is in a buy zone. Wow. So Applied Materials is in, and OTEX are in currently. Everything else is extended, or it isn't quite in a buy zone. But you can find all about this if you go to www.Dallas Trading Floor and sign up for a link to my small portfolio. And of course, everybody that's on TikTok, super easy. All you have to do is just go to www.Dallas Trading Floor, or if you want to get on the Action Trade Alerts, that's different from the link for the small portfolio, but that's super easy too. All you do is you just go to my bio, click on the link, and you'll be taken directly to the sign-up page. So I'm also going to put an option for various lists on there when I get time to program it. But right now, that is what it is. So great. So let's look at some more questions. Here we go. What happens to fractional shares? I own $1,500 of Tesla. Well, you will probably get made whole on Tesla. Here's the problem with fractional shares and why I don't like them. Fractional shares are not fungible. Can't be traded between brokers. If you own a share of a stock, you can say, I don't want to trade with Robinhood anymore. Give me my share, and then you can take that over to TD Ameritrade or Charles Schwab or whatever, and that's totally fungible. You own it. With a fractional share, it isn't so easy. It's not really a share. What it is it's a share. It's a fraction of a share that is in the custody of a company like, for instance, Robinhood. So basically, somebody at Robinhood has to buy your share out, has to buy your fractional share out. So you're going to have to sell it probably back to Robinhood or whoever it is. It's probably Robinhood because most of the people are there, and that's it made it convenient so that you can buy small portions of the share. And I totally understand why it is, but what I would recommend is once you sell it back to Robinhood or whoever you have it with, then I would take the cash and I would move it to a real brokerage like TD Ameritrade or Charles Schwab. Not that Robinhood is bad. I mean, a lot of people trade on Robinhoods, but there are a number of issues with Robinhood in terms of execution and ownership of shares. So it's not a problem, but and I don't think you'll have a problem. But really, I am not a fan of fractional shares. I want to actually own the real ones. So that I wait until after it splits, and then I think you should maybe sell your fractional take the cash, and then go out and buy a real share that you can register in your own name and not in the name of the brokerage like Robinhood. So that's my take on it. Tesla's too high, too much money. What about Apple? Buy now or wait for the sweat. Well, I agree with you. I mean, I think it is. But see, here's the thing you've got to think about with Tesla. I mean, I was in my Sparl portfolio, I didn't buy 100 shares. I just bought one. So Apple is definitely in a good place right now. Here's the thing about Apple. It's going to run up right before the split. These are very unusual. Splits like this are very unusual, by the way. They really don't come along all that often. And, they don't come along all that often. But let's look at Apple right now. Let's see. Apple is going to trade very, very similar to the way that Tesla is trading, because it is in a split, and in 90% of the time, it trades like that. So let's look at the chart of Apple. I'm going to switch to the daily view on this chart from the weekly view. I typically start out with the weekly view. Now, as you can see, it's been moving up significantly, and it came out of a base pattern, the buy point 399, so we're extended from that. It's now 473. I do believe that up to the 27th, Apple will continue to accelerate. How much, I don't know, but I definitely think it's going to go over $500 a share. That will be the height. That will be as high as it probably will reach its maximum price on the prior to the split on the 27th or the 28th. After the split, you're going to see the price. You're going to see the shares distributed, and then there's going to be some selling pressure, and then we will see the split shares come down in value. So let's say, for instance, at the 27th or 28th, the day of the split, Apple is trading at 400. I know it's trading higher, but the math is easier for me. You got to bear with me. It will become 4 shares worth $100 each. Well, once that comes through the split, it's very likely. It's not guaranteed, but it's very likely that those shares will then decrease in value. And why? Because people have those shares and they're going to sell them off to balance their positions. Now, that should last about a week, up until about September 3rd. Once that happens, once those shares are distributed, the vast public is going to say, wow, I really want to own, I couldn't own Apple before, and now I can own it. So they're going to come in and push the shares up. So I think that the ideal time probably to buy Apple is going to be after the split, and that's going to be probably on about September 3rd or 4th post-split. Now, you can buy it now because everybody that is an owner of record, this isn't for fractional shares, by the way, this is for real full shares. On the 21st that's Friday, this Friday, we'll get the dividend for the 3 extra shares, making the 4-to-1 split on the 28th. Now, those will start trading as the split shares. They will start trading on that Monday, August 31st. So I hope that makes some sense. I hope that made some sense in the way I was trying to explain it. So hopefully that will be good. All right, so you have to be of record. What does that mean? Very good question. What that means is you have to either own the shares or you have to be in contract to own the shares. Remember, when you buy a share from a brokerage house, you have up to 3 days to pay for that in cash or in margin or however you want to settle that. It doesn't actually settle for 3 days. But if you buy it up until Friday, you will then be of record on the 21st. That is a requirement in order to get the split shares. So that you want to be either an owner of Apple or Tesla by Friday, so you get those shares. Now, if you buy it after that, the price probably will not collapse up until the 27th, but you will not get the shares when they split. So you will get a cash. You won't get the dividend in shares. You will get it in cash. The difference between 1 share and 5 shares in the case of Tesla. So. But you have to be of record. That means you have to either own the shares, have paid for them, or be contracted to buy them where you've purchased them and you own them. That's part of the reason why these are starting to trade up so rapidly, because people want to be of record by the 21st. So it is pushing it up very, very high, very, very high, because everyone wants to be of record by the 21st. So we're going to probably see a little bit of movement into that period. So and I'll go over the chart in just a second on how I'm going to trade it anyways. Has anyone made money listening to this guy? Well, a lot of people have actually. A lot of people have. But I'm saying that, so I think you have to check around. But I think you will find that a lot of people have made money listening to me. So, not that I have the not that I have the have everything, but I do show I do show in my small portfolio. I do show how I'm trading at all times. So, hopefully that is some transparency there, and hopefully hopefully there's some transparency there. Okay, what is your take on Workhorse? This is not Workhorse is an interesting company. It wouldn't be in play if it weren't for the fact of it really wouldn't be in play if it weren't for the fact of Tesla. It makes truck bodies, which hasn't been a very big area for a long time. I want to show this. It's sort of flat. I don't necessarily think it's a winner. I mean, there's other things I would buy other than this. I'm not saying that it's bad, but I don't really like this chart very much. This is the 40-day moving average here. It's a relatively new issue. It went from about 4 way up, and then it's pulled back. And I think that's going to be the case with this. It still has a very, very, very strong relative strength at 99. So it's still moving very, very well. And it seems like a lot of volume, but the volume is down, and the composite is moving down. I don't think it's not really buyable at this point. It's not in a good enough pattern. So let me see if I can find. I don't think this is really buyable now, but let's look at it just in case there is a formation. All right, so let's see. Okay, Workhorse. Yeah, there really isn't a pattern. There's really nothing to buy on here, but let me show you the more detailed chart here. This is the daily chart, and again, we want to start with the weekly chart and then move into the daily chart when we're looking. But and we do have the 50-day moving average above the 200-day. That is good. But I don't really. This isn't really. There's not enough time on this one. It did go through earnings. It didn't make any money. It looks like. Yeah, it didn't make any money. It does have some fund ownership, though. I'm surprised. It has 12% fund ownership. But I would watch this one if you're very interested in it. It's seen most of its increase right before July, basically when everybody was trying to get into that sort of follow the leader Tesla mode. This is sort of a Me Too stock. I don't think it's probably a great investment, but you never know. You can make money on those too. So. Fastly, wow, this is a rocket ship. Fastly is a rocket ship. That's all I can say about it. Let's look at the chart for Fastly. We were going over this chart last night in my study group. Yeah, it's bounced very, very, very convincingly off the 40-day moving average. So let's look at that chart really quickly for Fastly. Here's the thing. This is the 50-day moving average here, and as you can see, in the last few days, it's really just hugged right on this line, and boom, there was a big buy that came in here. This is moved above the average. This is very buyable right now, and it probably will move higher at 88.73. I think that you could buy this one very, very convincingly, and probably hold on to it until it reached about 102. So I think that, but if you do buy this, be very, very careful. Set your stop losses relatively tight at about 5%. So that's what I would do on this one. It does look very good. There's a lot of energy in Fastly. I like this chart. I think it's really good. So let's just do a little bit more research on it to see kind of if it's something that we want to necessarily be in Fastly. And I'm just going to do a little bit more research here. FSLY, Fastly, I think that's it, Fastly, great. And let's look at some of the fundamentals and see how it's looking on that to see, wow. It's still not number one, but it's in a great area. So let's look at this is in the computer software enterprise. There's a lot of good stuff in this sector. So this is a great place to look for things. The industry group is 6. That's not bad. It's gone through earnings, which is good. Don't buy it in front of earnings. I never try to. We have it's got a 9 billion market cap. That's good. It does have a pre-tax margin that it's still losing money, but this looks Fastly looks very, very good. Very, very good all the way. So if I did go into this, I would want to buy it off of better base than this, but it's a very buyable stock. It's a very buyable stock as it moves off that 50-day moving average. So thank you for that question. Very, very good question. Do appreciate it. All right, so let's take a look at ATVI. Let's see if there's anything there in ATVI. ATVI. And let's take a look at ATVI. Activision Blizzard, wow, great stock, great company. Just not, we're so close to the buy zone, but we're out of the buy zone. We're gonna have to wait on this. This unfortunately is not buyable at the current price, and I'm going to show you why. Well, let's look at the weekly chart just to give you a look. It's actually easier probably to see this on the daily chart, but the pivot on Activision off of a flat base is 75.97. It is 83.99, so it's above its buy range, just barely. And it's up on good volume. You know what? If this thing settles back down, if this moves down to the 50-day moving average, which is this line here, this red line here, if it moves back down to that and it bounces on that, when it's on the rebound, that's when you want to buy it. I think it needs to come back down to the 50-day moving average, but it's not that far from it. So that 50-day moving average is about 78.50. So if it comes back down to 78.50 and then starts to change direction, always remember, you want to buy not as it's moving down, but wait until there's an uptick when you buy it. So don't buy it on the downtick, buy it on an uptick. And if it's bouncing off of the 50-day, I think you're going to see some very nice stuff there. So I like Activision Blizzard. I like the sector. There's a lot of things I like about Activision, and it's one of the old game companies like EA, but it's quality. So there you go. All right. Yes. If you're here for okay. Sorry about that. I do some under $10 stocks, by the way. I do some penny stocks, but let me explain a little bit about penny stocks. Typically, with penny stocks, they're more volatile and they're harder to trade. It's easier to make money with a quality stock bought correctly, a few shares of. So instead of buying 800 shares of some Chinese company that is fraudulent and may go higher, may not, or may just run away and may just take the money and just run away, because that happens too. Try to buy something quality and then just buy a few shares of it. Like, for instance, in my small portfolio, I have 2 buys of 1 share of Tesla each. And they've done very well. I did have a penny stock that I did buy. Well, it's not really a penny stock. It's under $10 stock. And that is Blink Charging. But, here's the thing about Blink Charging. You have to be very careful. Now, it's true. I held it for less than 30 days. It went up 75%. And I was out of it, but I was very watchful and I pushed up my stop loss. So penny stocks can be sold. You can make money on them, but as a substitute for real investing, nah, not so much. It's more like buying a lottery ticket, and sometimes you win a lottery ticket. So hey, there you go. So anyways, that's my take on it. You can, if you use position trading, you can buy the quality stocks and you don't have to have a lot of money. That's my point. Why not buy the quality stocks that are better and just not buy as much? That's all. Just buy a small amount. And that's kind of how I that's kind of how I view it. But I do have under $10 stocks, so I'm not against them. I just think that they're a little bit harder to trade, and they just have to be sort of sort of better on that. Sort of better on that. So that's how my take on it. Anyways, so let's see. More questions from TikTok. Thank you so much for looking. What about Amazon? Well, Amazon's in a buy zone right now, and I think we went over that a little bit. NEO. Let's look at NEO again. NEO seems to be a very favorite stock. I think with many of the people that are Robinhood traders, people really seem to like NEO. It's a Chinese company, and I don't trust their numbers, but you can still make money on it. So, right now, Alibaba is almost in a buy zone, so the other one. Okay, it definitely has a good 50-day moving average. That looks pretty good. But let's look at the weekly chart, see if there's anything that we can do with this NEO, because it definitely is moving up. Yeah, this just unfortunately is a pretty hard chart to buy. Now, it's probably buyable at about the 975 level, so we're definitely above that. Is that right? Let's see. I'm just trying to see. Yeah, it's probably viable at about the 1325 level and above, and it's definitely up above that. It looks as if it's following the 50-day moving average, hugging this. So this is actually not bad in terms of buying it. Now, how high is it going to go? Who knows? But it does have a 99 rating, so that's pretty excellent. Relative strength is 99. So this is in the top 1% of all stocks. So this isn't really bad. This isn't bad. Now, if you do decide to buy NEO, I'm not currently in NEO. I'm in Tesla instead. But if you do decide to go with NEO, be very careful about your stop losses and set them at, when you start out, set it at 8% below where you're gonna buy it. If you buy it, let's say, at $13 a share, you want to set it. At the way to calculate the stop loss is take that 13, multiply it times 0.93, and then I'll give you a 7% margin, or 0.92, which will give you an 8% margin, and then set your stop loss good till cancel in there like that. And then as the thing moves up, move that stop loss up, and then eventually move that up to the 50-day moving average line, and that will be, that will be the best stop loss. Basically, the 50-day moving line, or a little bit below that, maybe 2 to 3% below that. So, always use a stop loss on stock like this. They're very volatile, and it's much easier than trying to sit in front of your computer trying to figure out, wow, if it goes down, what do I do? You'll already know. So that's a great way to go. Let's see. Okay, well, we have some more. Yeah, good run on Tesla. I think so too. I really do. I think it's pretty cool. Hey, and thank you for looking at thank you for looking at this. On OTEX. Thank you very much, Thomas. OTEX, thank you for looking at my little thing. It's in the OTEX is in the it's in a buy zone. Okay, so I want to take a look at OTEX. This is a lower priced stock that looks pretty good actually, and it is in a buy zone. So let me kind of show you what the buy zone looks like. And thank you very much for this question. I think it's excellent. We have a cup formation, which is excellent. It's a cup without handle, but it's still a cup formation. We have the 50-day that's crossed the 200-day. That's a very bullish sign. Also, we have a pivot on this bad boy, and the pivot is at 44.05. So I'm going to put this out there. OTEX, OGEX, pivot, PIVOT, is equal to 44.06. All right, there we go. And so now we are a little bit below that. We're at 44.65, but we're definitely in a buy zone for this. Now, it moved up a little bit out of the buy zone. It's moved back down. We are at a very significant, very significant, in that we've had some of the highest volume ever on this stock, and it's just gone through earnings, and it's up. So this is one that is kind of ready to go. Open text 44.65 currently, and the buy point as 44.06. So it's right in the buy zone. If you do buy this, be very careful, of course, to buy it. But then when you buy it, please put a stop loss in at least 8% below where you bought it. So always set that stop loss good till cancel, and then as the thing moves, if it starts to look good, move that stop loss up, and you'll be very, very happy with that. So hopefully, okay. And let's see, I did J&J before. What do you think about the Cisco dip? Good time to buy. Don't buy on dips. my word to you, and this is, you're going to probably hate me for saying this. Like, God, everybody at CBC says buy on dips. Buy on dips. No, don't buy on dips. No, buying on dips is basically for fund managers that have made a mistake. No, we don't buy on dips. We sell when it goes down. We buy when it goes up. So here we go, and this is the Cisco chart. So let's look at it real quick. All right, well, it looks like we broke through. Oh, this is a very bad chart. Oh, man. Oh, no. Don't buy this on the dip, man. This is a classic chart. And let me tell you what this tells me. This is a sell signal. You see how we have this tremendous volume here? We went through earnings and they went down 4%. This is a sell. The big boys are selling it, unfortunately. No. Oh, and I like Cisco too. I have a Cisco phone. I think it's really cool. It's a wireless phone. It's a wireless internet phone. It's just, I love it, but it's about 10 years old. So it's not the latest technology. But yeah, this is a sell signal. Don't buy this, please. If you're in this, consider getting out of it. I don't think it's going to be too good. It's not a dip. This is going to move further down, unfortunately. Tesla RSI. Wow. Okay. Well, RSI on Tesla. And let's look at Tesla. TSLA. I think it's a 99 today. Yes. Oh, yes, it is a 99. Let me just show you. Now, I don't track the RSI, relative strength indicator. I use a different indicator than this. I use the relative strength rating, and here's what my chart says. This blue line here is the S&P 500. If you'll notice, this line is going up and up and up and up. And why is that? Well, Tesla is actually getting better, if you can imagine that, better relative to the S&P 500, and it's already number one in the category. So it doesn't get much better than this, folks. Look at this gap up. Wow. So that's what it says. Okay, well, I have wasted another. That's what the guys at Car Talk just said. That would have been great if I met that guy. Unfortunately, he's no longer with us. But that's what they always used to say. You know, I've wasted another hour of your time. Well, I have wasted another hour of your time. I hope that. I've been able to answer some of the questions. I know I couldn't get to every question. I'm so sorry. This thing is starting to blow up. But I tell you what, if you want to ask me a question, I'm going to try to answer as many as I can offline. And it's super easy to get me offline. All you have to do is go to www.DallasTradingFloor, and in the Ask a Question, just hit that button and you'll be taken right to the thing. Just put that in there. It helps me organize the questions so much. I so appreciate it. I try to get to everybody on that list. So I will be back tomorrow at 2:30, and it'll be probably still more Tesla stuff, if you can imagine that. Imagine that. But hey, there we go. And I'm going to try. Oh, thoughts on DraftKings. I really like DraftKings, by the way. I don't have enough time to go over the chart, but please put that in the email to me, DallasTradingFloor.com. I really like DraftKings. I think it's great. I think Penn National and DraftKings, I really like both of them. And anyways, that's where I'm going there. Well, and so tomorrow I will be back 2:30, and to answer hopefully all your questions, as many as I can get to. And I so appreciate everybody. By the way, it's a big celebration. We are past 20,000 people on TikTok. So thank you very much. Hopefully TikTok continues out there. We're over 20,000. So that's a big, champagne cork for me and Dallas Trading Floor. And so I so appreciate it, everybody. And I will see you tomorrow. Thanks for watching.